I'm Mr. Kura. We will try to teach you some Swahili before you go back to Johannesburg. Good to see you, man. My name is Boniface Abudho, as you've been told, and I work at Knight Frank. I'm the Africa Research Analyst at Knight Frank Africa. It's always a pleasure to be in a room where all conversations are about Africa. I'm one of the people who believe strongly in the potential of Africa, especially when it comes to its population, young population, which is also ever growing. Our projections indicate that by 2050, 1 in every 4 people will be coming from Africa. And to me, that's a huge untapped potential which we can take leverage on. Welcome to the Africa Report. Start showing. I thought it should show on the screens, but anyway. Oh, okay, that is, thank you. Right, so as Horace mentioned, we are launching the Africa Report today. This is one of Knight Frank's major publications that we produce only once every 2 years. And it has an analysis of some of the key real estate trends in Africa, cutting across 4 major sectors, the offices sector, retail sector, industrial and residential. You can download the report by scanning the QR code showing on your screen. The code is also on the A5 pamphlets that I issued to you to get the full copy of the report, even as I try to unpack some of the key trends from the publication over the next 13 minutes or so. Right. So I will start the presentation by looking at the key insights from the report. I'll start by looking at the Africa commercial office sector. And some of the key trends we have highlighted from the report is that, number one, we are witnessing a flight to quality, which is driving demand for grade A and ESG compliant offices. Now, this demand is coming majorly from the expatriate community, and this is helping to support low vacancy rate in the prime offices segment. A good example is in South Africa, where now the prime offices are recording reduced vacancies, averaging less than 5%. Elsewhere, despite the increased demand for the grade A spaces, there is undersupply of true grade A offices in Africa. And this is helping to support rental growth across markets that we are tracking. An example is in Nigeria, where now the prime rental rates for the prime offices has gone up to 55 USD per square meter per month. Other examples include Cote d'Ivoire and Egypt, where rents are now being recorded around 35 USD per square meter per month. Elsewhere, there is oversupply of the lower grade offices, the grade B offices, which is now leading to rising vacancies in select African markets. And in the report, we have given an example of Zimbabwe, whose 2 main cities, Harare and Bulawayo, are recording increased vacancy rates. Harare has around 60% vacancy rate for its grade B offices, while Bulawayo has around 40% vacancy rate for its grade B offices. Elsewhere, there's a shift towards flexible workspaces and smaller office units. And we are looking at an example of Uganda, where demand now remains concentrated for smaller, flexible office units, measuring between 50 and 240 square meters. And this demand is being driven by SMEs and firms which are adapting to hybrid working models. Lastly, there's the centralization to suburban offices from the CBD offices. And we are giving an example of Zimbabwe again, where there has been exodus of people from the CBD to the suburban offices, being driven by a number of factors, including aging infrastructure, security considerations, and reduced accessibility within the CBD. Now, looking at the office market outlook, generally, we expect the prime offices to continue outperforming with stable occupancy, being driven by the expatriate demand for the quality offices. We also expect continued pressure on the lower grade offices to either refurbish to the grade A standards or repurpose to other land uses to maintain some good occupancy levels. The rental rates are expected to remain modest, especially within the secondary offices stock, because of their unattractiveness, while there will be some growth in the rental charges within the prime offices segment. Investor focus will be majorly on income stability and asset quality to meet the increased demand for the prime offices. The next sector is retail, and some of the key trends we have highlighted from the report are as follows. Number one, we are witnessing a shift towards convenience-led and neighborhood retail formats as consumers now prioritize accessibility and proximity to residential areas. And in the report, we are giving an example of South African-based Checker 6060, which is named for its main purpose of allowing its users to order groceries within 60 seconds and have them delivered within 60 minutes. Again, this rise of lifestyle retail in markets like Cairo, whose current retail market exceeds 2.6 million square meters of gross leasable area distributed across 82 different developments. E-commerce is also driving omnichannel retail strategies in markets like Kenya, where now the near universal smartphone penetration is enabling deeper integration between physical and digital retail strategies. There's tourism, which is supporting retail recovery in some markets like Morocco, whose main shopping centers, including Rabat and Casablanca, are now attracting both local and international domestic brands, thereby supporting increased footfall in those shopping centers. Generally, there's selective expansion by retailers amid cost pressures because of reduced disposable income and rising operational costs in markets like Zambia. Now, the retail market outlook, generally we expect convenience retail to continue outperforming large format retails because, as I've mentioned, consumers now have shifted towards proximity-based retail driven by increased transportation cost and income constraints. We also expect continued evolution towards mixed use and lifestyle assets, as is the case in Ethiopia, where mixed-use developments are now integrating retail and residential strategies. We expect just a moderate rental growth aligned with inflation in Africa, since there is low disposable income generally and decreased purchasing power. And informal retail is to remain a strong competitor in many markets, which will continue to capture a significant share of consumer spending. The next sector is residential, and the first trend that we have highlighted from the publication is the sustained demand for prime residential assets from the expatriate community, the high net worth individuals, and diaspora investors who prefer to stay in secure, standalone villas with high quality amenities. There's also persistent affordability constraints across different markets in Africa. Now, we always say that affordability remains key to fully unlocking Africa's housing potential. And now we are seeing a situation whereby tenants are, in fact, prioritizing cost over location, and they're moving to a peri-urban and more affordable residential areas. There's growth in the short-term rentals market, and the demand for holiday homes is also on the rise. Now, for the short-term rentals market, that's expanding across many markets that we are tracking, being supported by tourism and diaspora inflows and business travel. And then the holiday homes demand is equally on the rise in Africa. In fact, according to a survey we conducted across GCC, high net worth individuals in the GCC, 51% of them say that they were targeting to buy holiday homes in Egypt because of the benefits of coastal benefits and investment potential. Generally, there's a shift towards apartments and gated communities driven by land constraints and security considerations. And then access to housing finance remains a challenge due to high transaction cost and strict lending criteria, thereby limiting uptake. In the report, we have highlighted Zambia. Where mortgage rates in local currency are now exceeding 20% per annum on average. Now, the residential market outlook, generally we expect sustained demand in the prime segments, despite affordability pressures driven by the expatriate community. We also expect moderate rental growth driven by supply constraints. Now, Africa still has a huge housing deficit. In fact, in the report, we have mentioned some numbers. Zambia, for instance, has a 1.5 million housing deficit. Ghana and Kenya each has over 2 million housing units deficit. There will be expansion of integrated and master planned communities in markets like Kenya, where master planned environments are now offering infrastructure and lifestyle amenities which are preferred by the majority of buyers. Finally, affordable housing is to remain a structural challenge due to limited access to housing finance. The last sector we're going to look at briefly is the industrial sector, and it's good to mention at this point that this is the strongest performing asset class across the markets that we are tracking, recording some of the highest yields. And this is supported by sustained occupier demand and a growing pipeline of infrastructure-led development. The growth is also supported by logistics, trade corridors, and special economic zones. A good example in the report is Nigeria, which has been highlighted, where the demand for great air logistics space is now concentrated within SEZs, such as Lagos Free Zone, where occupiers are benefiting from integrated custom processes and more reliable power infrastructure. There's also the growth in e-commerce and the FMCG as well as manufacturing sectors, since the demand is largely strongest among the fast-moving consumer goods companies, e-commerce operators, and regional logistics providers. We are seeking modern distribution centers with improved transport connectivity. Finally, there's limited supply of modern identification facilities despite their increased demand. The last slide is the industrial market outlook, and generally we expect continued outperformance of this sector, driven by logistics demand from FMCGs and e-commerce operators. We also expect rental growth being supplied by supply constraints for modern warehousing facilities. We also expect expansion of logistics parks and special economic zones developments due to attractiveness of special economic zones, including tax incentives and improved infrastructure. And finally, we expect long-term growth to be tied to infrastructure and trade integration. A good example is the African Continental Free Trade Area Agreement, which is supposed to increase inter-African trade by over 50% by the year 2045. Ladies and gentlemen, that's a very high-level summary of the Africa report. As I've mentioned, you can download the report by scanning the QR code on your screen. And if you have any questions, the team from Knight Frank is here. We are happy to respond to you with regards to any questions about the Africa report or any other service lines that we are providing as Knight Frank. Otherwise, Thank you so much, and I wish you all a lovely day.